Afternoon, everybody. Welcome to TraderMerlin Show. It is your Thursday edition, tail end of the week. An exciting one. We had some fun market moves out there today. Hopefully you all enjoyed those nice swings. I was really surprised to see some of the resilience of these major market indexes, particularly the NASDAQ. Had to close out my position, took a loss on that one as well. Told you it was option position expiring tomorrow, and I thought, no reason to take that risk, even though watch tomorrow would have a huge sell-off and I would have been in the money. But rules are rules. Small loss on my part, no big deal. Today's question is fueled by a couple different viewer questions. I received this question from a gentleman named Ken. It says, what do you think about Walmart? We'll talk about Walmart's earnings. And then I also had a couple friends in the trading world ask me, like, what do you think about buying Walmart at this point? So I actually started writing an article about this afternoon. Like, why not look at that discussion of should we buy Walmart? I'm going to include everybody here in that discussion today and get your 2 cents on it as far as what you think about Walmart. Would you be buying Walmart? And who knows, maybe we'll find an investment opportunity here going forward, and I'll tell you my thoughts on it as well. So I'm going to start things off just by looking at Walmart. Here's your Walmart earnings announcement. This is from Zacks. I'm seeing slightly different numbers elsewhere, but bottom line is Walmart was expected to make $1.53 per share. They came out at $1.53, so they were in line with estimates. And while that's, I guess, good, they met expectations, they said some things after in the press conference that was, or in the conference call that was rather bearish. Now, this is a stark contrast to what you've seen happen already with companies like TJ Maxx. You had Target also had really good earnings. Now, a lot of retailers are doing pretty darn good, at least at this point with regards to their earnings announcements. Almost everybody's beating it. Now, this is one of the first ones I've seen in the retail space that didn't actually beat it. So, we could look at Target. I'm going to bring up some charts here to run through here. You got TGT. All right, so Target, this is a weekly time frame. I'll go back to the daily. We saw yesterday they had that huge pop up and actually showed fairly decent resilience today. At one point, it was down significantly and then started to rally back up here. So, all in all, Target's still holding. You had TJX. All right, there's TJ Maxx on their earnings, which was a beat as well. So they were supposed to come out at 99. They came out at $1.03. Right, looked good. That was yesterday's earnings announcement. And then today you had them down 1.19% the day after their earnings count. So the kind of strange to see companies beat earnings and drop like this. Now, this is a similar picture what we're seeing with Walmart right now. Right, Walmart came in line with expectations. Let's go to WMT. Yet today, not only did it gap down, but it just kept on going down and going down and down and down. So, terrible picture for Walmart. Now, what was it that was said? Well, the comments from the CEO were pretty clear. He was saying that, while our numbers are good, we feel like we're noticing trend changes in consumer behavior. And that was reflected also by the CFO. Of course, I'm sure they had a meeting and said, hey, when we do our press conference, here's what we're going to say. Don't deviate from the script. But both of them were identifying retailers and saying the retail consumer, at least at the tail end of October, was exhibiting some different patterns. And those patterns were they weren't spending the big money on big ticket items, refrigerators, appliances, TVs, those sorts of things. And in their opinion, that was they're waiting for the Black Friday deals, which you should all be doing anyway, right? You should only be buying things that you need, but yeah, wait till Black Friday. I spent a whole bunch of money today on things that I know are at great prices because I've been tracking them for a while. I literally have a list of things that I'm looking to buy, and I keep a list of prices. Like, what's the cheapest I can get right now? And if I see it significantly lower than that, I'll pull the trigger and buy it because they're things I need. In some cases, they're things that I want, but most of it's things that I need. So Walmart citing that customers were being much more selective in their purchases. Now, in my mind, what that would say is, yes, your purchases are selective now, but as soon as those deals come online, then that brings in that money. So the money is just kind of parked on the sidelines, if you will. However, there were some other quotes that I think really changed the script a little bit over normal, right? We could look back historically. Retailers tend to perform well because there's so much buying going on in November and December. Now, you look at the price charts at January and December, or January, February, March, those start to slow down for retailers because we already bought all the stuff that we need. They made this statement that deflation is potentially going to be an issue, cutting their profit margins, because right now they're seeing a slowdown, and the CEO and CFO both said that Walmart is experiencing a slower feeling there's a slowdown because inflation has gotten so high that your dollar can only buy you so much, therefore they're not buying as much. And that's one of the reasons. So it kind of leaves me with this interesting question or conundrum that I have, which is, if inflation is dropping Now the consumer can buy more. Shouldn't that be good for Walmart and Target and TJ Maxx's bottom line? Because now the consumer can spend more. It sounded like the CEO was saying deflation could hurt us because we're going to be lowering our prices because we want to give the best prices to customers. In my ears, what I hear is we're going to do price wars. We're going to keep dropping our prices. Even as inflation drops, we will drop that lower and lower and lower and pass it on to our customers. Now that's interesting, and it presents this question, which is the graphic for today, which is there an opportunity with some of these retail players? Right? Do you think that there's opportunity here? So before I go into the charts or analyze anything, how many of you, without really digging into it, how many of you would feel comfortable saying, yeah, you know what, I would buy some retail stocks? Let's just say Walmart. I mean, look at Walmart down today, 8.09%. Here's the longer term chart of Walmart. How many of you would be like, okay, buying Walmart around these levels? Any yeses? See, and yeses or nos. If you say no, just tell me why. There's no right answer here. I'm just curious. Open forum, open discussion here on would you buy Walmart? And at the end, I'll go through and give you my assessment of it. But you've got Walmart was kissing 170 yesterday. Today it's at 156. Hit a low price intraday of, what was our low price intraday? 155.50. Right? Pretty ugly fall. Now, we could draw some technical analysis pieces on this. I'm pretty sure that you'd see that this is going to be, depending on which moving average we use. Do I have any? Simple moving average on here. That looks like the 20. That's a 50. Wow. Let's put a 200 in here because people love long-term moving averages. All right, so we're not even at our 200 period moving average. You're kind of down near this area of demand. Now, I know it's got this really long tail that happened back in October, a really big slide there, but it's bounced back up here aggressively. So let's see what we got. Vikram says, no, too expensive. Well, price shouldn't be your only determinant, right? It shouldn't be about price because they could always have few shares out there. Then price isn't really the metric. Wait for the pullback. I'd rather buy something like Microsoft. Okay. Lee says, I was looking at Ross, Target, and Nordstrom's thinking maybe they will bring up Walmart, so maybe a long call. Okay. Big Eb says, not Walmart. No, you will get better price. Okay, yeah, although a bit lower. I'm cheap. Looks like it's rolling over. Is that, what's the forward PE ratio? Good question. I never trust that fundamental data anyway. Let me see if I can bring up your fundamentals here. Forward PE, I think it's just going to give trailing 12 months. So you have a PE ratio of 5.22 trailing. It doesn't give me the forward PE ratio on this site, unfortunately. Anyway, so let's go get rid of that. All right, so it seems like most of you are saying, no, I'd like to buy at lower prices. And, this is where, where you could go and sell options, sell puts, and say, all right, I'll buy it when it gets down to 150 or 150, 145. But I looked at the premiums. The premiums weren't that great on Walmart, at least going deep out of the money like that. Now, of course, if you give a longer time horizon, I'm sure you get more premium. I'm kind of torn because this is Walmart, right? It's the juggernaut that it just, you look at the chart of this thing long term, it really hasn't disappointed long term. Now, having it at an 8% discount today certainly is appealing. And to my friend that sent in that or texted me that question, I was like, look, yeah, it's an 8% discount, but it could be 10, could be 15, could be 20. And while the economic data is starting to shift and look better, we did have a bad retail sales number yesterday, right? It was worse than expected. Well, actually, it was showing contractions, which is not a good thing. How many of you believe, yes or no, simple yes or no, that the stock market or that the retail stocks perform better in the month of Christmas? So let's say you got December, January, February. If you use that 3 month, because there's this expectation you get the Santa Claus rally and you get that big price surge. If I look at the price history from December 1st through February 28th, would you guys be bullish or bearish? Bullish or bearish on that from December 1st to February 28th? And again, assuming we have a nice big retail, and of course everybody goes out and spends way more money than they should on gifts, whether it's for themselves or for family members or whomever. How many of you are bullish on that window of time from December 1st through February 28th? Just curious what you guys think, because I actually did some research on this one today, and I'll show you here. I'm going to look at Walmart on a monthly time frame to drive home my point. Let's go here to monthly, and what I'm going to do is I'm going to put a vertical line, everybody, on the month of December. Right, so we'll just look at that vertical line plus the 3 after it. So here is December of, where did that this year? There's December of 2022. There's December of 2021. And I'm just going to put a few more on here just to make this point kind of clear. there is an expectation, I've heard this many times, that stocks rally in the month of December. Well, if you look at these retailers, at least the retail trends here, notice what's happened almost every time December comes around. Hold on, I've got a couple more here. Almost every single time there's a sell-off. So these vertical red lines, okay, love it. And this is why we do these things, because many of you have this preconceived notion that it's bullish. Well, Walmart has not been. Right, here's your chart. Let's see. Naum says bearish. Lisa says bullish. Americans always spend more than they have. Yeah, that's very true. I got Joe and Big Ebra bullish. Manti says not sure. Because Manti, you know me well to know that there's a trick here. Somewhat bullish, generally bullish. No stock for me, no options, no trading stocks either. Theta decay for life. Okay. I'm still bear. Through the beginning of January, then not sure. Okay. So look at these vertical lines. This represents December 1st. So if I go December 1st of last year, where we think, oh, right, that's holiday shopping, and I go through the end of February, talking 6.25% slide. If I go the year before that, oops, dang it. If I go the year before that, which is right here, open there, down 3.81%. Okay, so these aren't great numbers. Real bad one here in 2020, of course. This was actually before COVID really even became an issue. We were down 15.42. If you go back to January or December of 2019 to the end of February, you're down 9.63%. So the point I'm getting at here is there is this belief system that is generally up. It's not. And the only reason I know this is I pulled all the charts. I was literally did this analysis going back a decade today for my article that I'm writing for Bar Chart. You notice that in 2016 to 17, it was up 0.97%. If you look at 2018 to 19, it was up 0.99%. But after that, like almost every time, it's been pretty dang ugly, down 3.22% from 2014 to 15. So that's generally, at least the cycle for Walmart, since the article I'm focusing on is looking at buying Walmart. So what about if we switch this to QQQ and just look at the NASDAQ? Like, what does the NASDAQ do historically in that same window of time? So let's go back here, all right? And I'm just going to map out a couple of these just so we have them. I know. You should have done this earlier, Merlin. I've been busy today. There you go. And we'll go back here to 2020. And we'll go back here. I'm just going to do the 4 or 5 months, just to, or 4 or 5 years, just to have a baseline for us. Okay, so if we go back from the NASDAQ in 2018 to 2019, we actually were down 0.07%. If you go, let's do this one from 2021 to 2022, we were down 12.93%. If you do the one that actually showed Walmart being up, the NASDAQ was down 0.04%. And it seems to be a recurring theme here. Oops, no, this is actually an up one. Anyway, I think my point has been somewhat made here, is that that historical belief that we have this bullishness that happens in December and runs to the beginning of the year, just not true. In fact, if you go back to last decade on Walmart, since I pulled these numbers from my article, if you go back to last decade, Walmart is down on average from December 1st through February 28th, on average 3.89% over the last decade. And again, this has been the last decade, which has been unbelievably bullish. I found that one very interesting because had I not looked at the numbers, I would have thought Walmart's probably killing it during holiday season. Now, what is interesting is after like March, there seems to be a nice bullish run for Walmart from a seasonality perspective. Manti says, how about 2009? You want to go 2009 and 2010? What'd that one do? Well, I don't know why you picked that 1 year, but I can do anything. I can do anything. It doesn't look very good either. So if I go 2009 to 2010, that's going to take me to right here. That's December. That number down 1.42% if we do that December to February number that you just asked for. January and February for returns. Exactly, John. Yep. Let's see. Through the beginning of January, and then not sure. All right. So that was just a little assessment, at least an evaluation of it. I think it's interesting to look at these things because we have this belief that markets rally, and it's a Santa Claus rally. Of course, when you listen to the Stock Traders Almanac, the Santa Claus rally is just the last 5 days of the year and the first 2 of January. So that's the Santa Claus rally. It doesn't mean beginning of November or beginning of December, although we have had an unbelievable start to it. I mean, this month of November has just been jaw-dropping, in my opinion. We're 10%. That's your average annual return we've achieved in 2 weeks. Crazy. Ali says, I think you just let down everyone who thought there was a Santa Claus. There is a Santa Claus. I watched Buddy the Elf. I know that Santa Claus is there. By the way, that is the best holiday movie. It's not Die Hard, which is a Christmas movie, by the way. No, Elf is the greatest Christmas movie ever made, which I will probably watch this holiday season. And to Lisa's point, I'm not crushing a Santa Claus rally. Remember, a Santa Claus rally, last 5 days of the trading year and the first 2. That's the Santa Claus rally. So we're not there yet. We got a month to go before we can even start doing that one. I do believe that Santa Claus rally is true and that there's a nice market rally because of it. Why? Statistics, the numbers don't lie. And that's why I wanted to bring up these charts, just to show you how it was. Oh, wow. Now I'm the guilty one for killing Christmas? Big Up says, fourth quarter and third year of a presidential cycle ends well statistically. It also continues into Q1 of the fourth year as per Stock Traders Almanac. Yeah, and that's where I'm torn, because typically a presidential election year is bullish, and we'll see how that's going to be. Right now, I know that we've got a mixed bag here. I know some are looking at this chart going, not this chart, but this chart here, looking at it going, hey, we're at all-time highs, right? Here's the S&P. We're going to rally back up. We will, this is your monthly time frame. Let's go back to real data. There you go. We're going to come right back to this all-time high, which I will map out, put it right across the tippy top there, right? 48.08 goes back to January of 2022. Many of you thinking we're going to hit that, and I can't. Given what's gone on over the past couple weeks, it's hard to refute that. I still think we've got a lot of economic headwinds and problems in front of us, but the market just doesn't seem to care. Remember, my opinion doesn't matter. It's just what the charts say. So at this point, based off what's gone on since November 1st, actually since the last 2 days of October, you could easily see a challenge of all-time highs here. So I got lighter positions. As you guys know, most of my portfolio is right now selling puts, and it's been great. I wish I had more directional. I have a couple things directional, but not a lot. So collecting my premium, even though these markets have ripped away from my premium strike prices, that's fine with me. I'll just take it. The only thing that I'm really at this point hoping I don't get taken out is tomorrow. You guys know I have a lot of SLV, and I have calls against my position that I have sold at 22, and I have some at 22.50. So I'm hoping tomorrow that we have another update, but I don't want to close above 21.99. I want to stop at 21.99, can then give me a big gap up on Monday and let me sell the 24s or 23s and get great premium plus all the gains from silver. Oh yeah, bring it on, baby. That's what I'm hoping for. Anyway, I've deviated from the discussion, which was retail opportunity. Lisa, I think it was Lisa. Hold on, let me scroll back here. Got to give you props because I think it was Lisa. It was Lisa was talking. I was looking at Ross, Target, Nordstrom's, thinking maybe they will bring up Walmart, so maybe a long call. Well, if you look at Ross stores, let's go ROST. Ross had an ugly one. Now, in the after hours, after they reported their earnings, jumped up 5%. So while the candle looks ugly here, it's actually way up here at the top. It's off the charts. It literally is off the charts. We're currently trading at 126.99. It closed at 120.15. So while it looked like a real ugly day for Ross stores, ripped to the upside on their earnings. You also had today with the GPS. I think GPS was were they today? Yeah, they're up today as well. Look at Gap stores. It's up 15% in the after-hour session. That, again, is literally off the chart. We are above those highs we saw way back here in December of 2022. So Gap posting great numbers. Let me go back and see what Ross Stores looks like. Where's it running into? Wow. Ross Stores is sitting right at this point where it's hit 3 times back in 2021. We hit it back in May of 2021, we hit it back in July of 2021, and we hit it again in August of 2021, and now it's hitting again at that same level in the after-hour session. So a nice move up there, Ross Stores. Surprising to see Walmart just the exact opposite of this one. So trend-wise, I love Ross Stores. It's actually one of my favorite places. The only one I like better is TJ Maxx. TJX is probably my favorite store. It's a guilty pleasure. You have everything you want in there and more. And TJ Maxx reported earnings yesterday. Make sure I'm right. Yeah, they reported on Wednesday. They're expected to make 99 cents. Came out with $1.03, and they paid for it. I didn't read the or the conference call. I wasn't on the conference call. I didn't listen to it, but they must have said something going forward about their stores, because that's a pretty significant decline for a good earnings call. Now, I did see a comment in there asking, like what shrinkage playing into it. A lot of them, the shrinkage discussion was toned down quite a bit. The previous earnings call, we talked about it last quarter. It seemed like every retailer was throwing their arms up, going, shrinkage is killing us. Just, theft. It seems like that's kind of gotten, not maybe under control, but at least they're starting to get it under control. And from one of the conference calls I was listening to with Walmart, they were talking about local governments and city officials addressing it and making changes at the local level, which is great. Like, come on, let's start punishing some of these people for rampant theft like that. So anyway, back to the story at hand, which is retail opportunity. Is there opportunity here? I always think that there's opportunity in retail because it's just stuff. It's stuff that you buy. Now, to the tune of Walmart, I am a fan of Walmart. I know people here don't like it. I think Walmart's probably the most entertaining place to go shopping. You could just sit down on the couch department and watch people go by. Too bad you can't drink beer in there or have a soda. And he was in the pool, Big Ab. He was in the pool. George Costanza hates shrinkage. One of the funniest lines in television ever right there. He hates shrinkage. I am going to probably shock some people here and be like, oh God, Merlin, you're just crazy. I sold the 155 put options today on Walmart. Now, I didn't sell a bunch of them. I just did 5 as just a little test. I like Walmart long term. I like that 200 period moving average. I like that prices are trending up. And when I listen to the words of the CEO, it's almost like they tried to drop the bar on purpose. Now, one of the things that Target had a huge advantage of is the media and everybody was talking so bad about Target that at their conference call the previous quarter, they lowered that bar so low that they had blowout earnings, right? Let me just look at the numbers here. We'll show you. We go TEGT, and I'll read the last couple quarters. This is where the whole fiasco started back in May of 2023. Their earnings, they were earning $205 per share. The next quarter, that dropped to $180. Now, they had already estimated $143. So, they already dropped that bar so low and they beat it. And look what they did this quarter, $147, and they came out at $210. So the bar is really the important piece here. With Walmart, they keep raising the bar. WMT. Right, we'll go back 3 quarters like I just did with Target. Walmart was supposed to make $131, came out at $147. They raised it the next time. So instead of estimating $131, it came out at $170, and they made $184. And now this time, they had a slight decline, which is $152, and they came out at $153. So I think that analysts have been much better against Walmart than they were against Target. Target had this real, bullseye on it, no pun intended, with their logo, and just got crushed. Therefore, that bar is easier to jump. Walmart had a bit of a higher bar to jump over. I did go long on Walmart. And I did the third week of December. What's that, the 15th? I think it's December 15th. So I gave myself a month out there. It was over 1%, so I was fine with that. And again, if I do get exercise on this one, I'm fine holding Walmart for the long haul. Now, I think Walmart is just one of those staples of American, not only culture, but consumerism. So there you go. Hate me if you want. All right, what else I got here? How much correlation? Not quite sure I understand. How come you don't have a name? I got this individual. You don't have a name. I just see it says, how mo percent? I'm not sure. Write your question out a little clear. I don't know what you mean. What do you want me to analyze there? You want me to analyze gold versus silver? We can look at gold versus silver. And what else do I have? Home Alone is way better. That is a good one. That's a funny one, but come on. Will Ferrell and Elf is just ridiculous. That is such a great movie. And I do like Christmas Story too. How do you not like Christmas Story? It's such a great one. Makes me want to have Chinese food every Christmas. I love that one. Where's the duck? Give me the duck. What do I think about XHB? Home builders, huh? Oof. All right, let's do XHB. All right. I'm going to let you guys tell me what. Actually, before we get into that one, Dave, when you say XHB, give me your time frame. Are you talking next week? Are you talking the next couple of days? Are you talking the next 2 years? It's hard for me to say what I think in one specific window of time, right? I could have different opinions for many different parts of time. So if I look at this picture right here, I'm bearish as all hell right now. I am waiting. I got my finger on that short button, and it's because you got his double shooting star, back-to-back days with shooting stars. His volume high, You actually had really high volume on Tuesday's session, which was that gap up there, that nice big jump up. I'd love for this thing to open above 81.40, and as it broke down, short the heck out of it, just like you saw with the Russell today, right? I think some of you, I hope some of you made that short on the Russell trade we talked about yesterday. Right, we're looking at the RTY futures, and I kind of said, same thing as my shooting star. If we break down below the low of yesterday, which is right there, right around 1802, then you've got yourself a great shorting opportunity. And you had high volume on yesterday's Russell as well. So this was a great short setup there. I see similar picture when I look at XHB. XHB has had 2 days in a row of shooting stars after a big run up on high volume. Don't short it yet. I'd wait for it to break down because obviously you've got these runaway gaps. It gapped and just kept on going 3 times. So that's very bullish for home builders. However, that little pause right there, that's suspect to me. That really makes me feel like this thing's going to come ripping back down. So I think there could be a great shorting opportunity. Davey said you bought some puts expiring next week. Depending on what strike price you got, I think you're probably going to do okay. We'll have to wait and see. I mean, it needs to roll over. It needs to break 81.40, but when it does, I think that selling's going to come in, and you're probably in a pretty nice position on that one. Shopping at Walmart is like visiting a ghetto. It depends where, Steve. Depends where. Yeah. There's 2 Walmarts by me. There's one in Santa Ana, which is like, I feel like that's the hood Walmart, and then there's one in Tustin, which is, I think it's actually Irvine, maybe be Tustin, which is much better. That one's a lot better. What percentage correlation between gold and silver futures? Beyond my my area of interest, but I'll show you here real quick. Let me see. I'll show you a website here that will allow you to look at that correlation, because I don't look at the correlation between gold and silver. Particularly, it's not something that interests me, but I will show you a website here, and I'll put it in a chat for a lot of you. For many of you, you should actually take this and bookmark it. This site's great for learning those relationships. So, gentleman or individual, I don't know if you're male or female, because there's no name attached to you. It says, what percentage of correlation there between gold and silver? Well, you can actually just go here, and you can go to, here's your silver futures. Right, so I'm just going to take that silver futures column, which is, it's not going to highlight, and I will go down to GC, which is right over here. Where's my gold futures? Did I pass it? Here's GC. So what percentage correlation between gold and silver? That's going to be roughly 82% correlation between gold and silver over the last 180 trading days. And you can change the correlation here to look at different time frames, but to answer your question, definitively, it's 82% correlation between the between gold and silver futures. So there you go. Walmart margins are so tight. If there's deflation and price war, won't that squeeze them already? Yes. And that's, thank you for bringing it up, because I thought I mentioned it, but I have so many thoughts going on in my head right now. I may have missed that one. That's the other part that has me a little bit concerned. If Walmart their margins are so small, right? They're making pennies on items. If they start lowering those costs, well, they're still going to hopefully be making pennies per items. And the talk track from the CEO was, we want to pass those cost savings on to our customers. Now, what they could do is, if the cost of their goods and services that Walmart is buying, right, Walmart buys in bulk, if those prices drop significantly, Walmart could keep their prices right where they're at right now and have blowout earnings. What they want to do is they want to be dropping prices to continue to have people come to Walmart as opposed to going to somebody else and getting a better deal, because, again, I think you're going to have price wars. And that's where Walmart has always had a competitive advantage, is their economies of scale, right? They can buy in such bulk that they can negotiate great deals with distributors and vendors. They've got that competitive advantage. So while I think you're right that the margins are so small, if there is deflation, it could potentially hurt them, but I don't think they're going to sell items at a loss unless, the Black Friday specials, they might sell a doorbuster stuff as a loss. But I think what you'll see is those prices are going to climb. They're still going to make their small amount. But the CEO made a comment. He goes, our goal is that we're going to allow them to stretch their dollar further, and we hope that when they're in our stores, they will buy more of the goods and services, because now their dollar buys more because the items are cheaper and they can buy more items. That was their thought. So if somebody comes in and they got $100 and an item cost, it costs $100 before, they can only buy one thing. But now if inflation drops and let's say that item is $75, they might be able to buy something else for $25, thus spending that full $100 like they did before. That's kind of the way that he well, he didn't actually say it in that way, but that's how I extrapolated his conversation. So there you go. You had mentioned in previous shows how you don't sell calls like like you sell puts. What do you do if you think a particular stock has limited upside but not sure about the downside? Well, knowing the impossible, squeeze situations that happen sometimes, there's never a limited upside. I look at everything has an unlimited upside. Just because I've seen it happen where something gaps up 2, 3, 400% and you're left. I've been short on a biotech stock that gapped up massively and just erased everything I had. So when I'm selling, I'm actually scouring the market for something that's downtrodden, something that's just had a bad earnings day, like Walmart. I think that there might be some opportunity here for Walmart, even though it's still a high price stock, selling the 155s. That's a little bit risky, especially given that it's the day of. Probably would have been safer to wait a little bit, but I plan on taking a step back from trading over the next 3 weeks. As you guys know, I'm on vacation. I'm technically on vacation right now, but I'm still going to do today's show and tomorrow's show, and then I got to see about what's going to happen next week. That may be 3 weeks without me. 3 weeks with no shows. I know it's tough. It's going to ruin all my metrics for the show, and I'll probably lose a lot of you as viewers because you're like, he's not there anymore. I'm going elsewhere. Yeah, I might be gone for 3 weeks. I will see. I have some things I need to get accomplished next week, so I may just take off and go get those done, which means no show. I'll have to get you a clear answer on that one on Friday. But 3 weeks of very, very light, just managing my portfolio. The only really thing I have to do next week is reallocate capital because most of my money right now is tied up in cash secured puts. Most of it, except the silver stuff. I know, MJ. I got to live a little bit, right? I'm not really going anywhere next week. I'll probably do the Monday morning must knows. That doesn't take any time. That's pretty easy. I know, guys. I wish I had somebody that could sit in and host the show for me, but no one's gonna do the show for free. Hey, you want to do the show for free and just everyone's gonna be like, how much are you paying me to do your show? Sorry, not gonna happen. How's the reliability of analyst ratings on earnings? Can it be biased or any conflict of interest? Jay Patel, don't ever trust it. Don't ever listen to it. BS, garbage. I wouldn't trust it with a 10-foot pole. No way. Remember, an analyst works for a company. If I'm an analyst for JP Morgan, I'm making. I might actually be one of the rare analysts that actually does my own analysis and does research and goes out there and looks at all the data and makes my own opinion. But I still have to let my employer know what I'm going to be saying. My statements can directly impact the firm. Not only do my statements as an analyst impact the firm needs to position themselves based off my analysts and my assessments. So typically what will happen is the firm, JP Morgan, will tell me, we want you to write a piece or we want you to issue this press release or give you an upgrade or downgrade or give a target on earnings, and here's what we want it to be. Right? They will give the analyst the recommendation, and the analyst is the one who goes out there and puts it out there. The firm has already moved on that information. It's like insider trading at the highest level. It's like, okay, we need to sell a bunch of XYZ stock. Great. Let's go out there and tell our analysts to upgrade XYZ stock so the retail sheep will buy this thing, it pops up, and then we can sell at a higher price. Or vice versa. Oh, we need to buy a bunch of Walmart stock, right? We want to load the boat for some customers. We got to buy it cheap. All right, great. They tell the analyst, oh, downgrade it because this whole deflationary price thing and it's not looking good for Walmart and blah, blah, blah. Everybody sells their Walmart. You get an 8% down day. Boom. JP Morgan can step in and buy on the cheap. So I look at any analyst recommendation, any of that stuff is manipulated, corrupt, and I wouldn't trust it. There's absolutely nothing that you can do to convince me that an analyst is honest about their assessments on a financial situation. If you really want, there's a video that you guys should all watch. I've mentioned this one before in the past, but I'll bring it up here right now just so I can share it with you guys. 1 second as I bring it up. I'm surprised they haven't just removed this thing altogether. Yeah, here it is. This is great. This is analysts. This is hedge funds. I want you guys to, don't watch this now, but check this one out. This is impressive video where it basically just tells you don't trust anybody who's a talking head. At least with you guys, I'm transparent about my trades. I'll tell you what I'm in, whether I made money or lost on it. That's fine. Yes, Joe, I plan on working on my book. I definitely plan on working on my book. Are you kidding me? Walmart may have larger margins than jewelers. I don't know about that. I don't think they have larger margins than jewelers. I would say that the margins are way smaller for Walmart because they can sell in such bulk. Jewelers don't sell in bulk; they're selling very few pieces. Therefore, their margins got to be higher. So, could you do shows on Bitcoin, crypto while on holiday? If I'm on holiday, no. What's the latest on Sam from FTX? I don't know, other than waiting on sentencing. I'm sure that they're going to appeal and try to do something like that. That's why I stopped watching CNBC, much like yeah, me too, MJ. I really don't watch that stuff. I don't watch Fox. I don't watch CNBC. I don't watch Bloomberg. I've in my 27 years doing this, God, it's embarrassing to say it's that long. It always feels just straight up manipulation. And while you may glean some nuggets from certain people, it's just not. It's a waste of your time. Really, price charts and digging and doing your own research is the way to go. I know, Pepe. I know. Let's see. Ganesh says, I have 85% win rate for selling naked calls and puts, but sometimes the 15% losing eats away all of it. Yep. If I convert the naked into spread, it will erode all of my money I win through naked call put. Any fix? It shouldn't erode all of that. Ganesh, I would have to evaluate. I think you have to sit down and evaluate what's causing. So you're doing naked calls. To me, that's, especially in a bullish market, that's. Yeah, I think that's a dangerous thing. You have unlimited upside for those calls, so I don't do naked calls. I do cash secured puts, and I make sure I always have the money to cover it with risk defined. So as far as why it's eating away, I mean, that's up to your strategy that you're doing there. But if you know that 15% is eating it all away, you need to reevaluate your strategy and find out how you can minimize that drawdown when you have those losses, or what's causing those losses. An analyst is a car salesman. Yep, 100%. They are a car salesman. All right, let me go to your economic calendar for tomorrow. I am going to cut the show short because I don't have much else to go over with you guys. Let's go refresh this screen here. Earnings-wise, nothing really that important for tomorrow, but there is a little bit of economic announcement happening. For the U.S., we've got building permits, we have housing starts, and remember, Goolsbee will be speaking from the FOMC. Not that significant, but just letting you know that one is there. They are expecting contractions in both building permits and housing starts here for the U.S. So that's not that positive, at least for market behavior. If you look at the earnings side of things, let me just bring up your earnings count, even though I mentioned nothing's going on. Here is Friday's session. That's the 17th. Yes, sir. You have the buckle. All right, from a market cap, look, all these ones here, they're all international. They usually would say under time, it's say BMO or AMC, but none of those are all international. So the only one we have here is BJ's Wholesale Club. That's before market open. You've got Atcore, who I have no clue who they are, or Spectrum Brands. I do know them, but really nothing going on in that earnings front, so kind of a quiet phase. Pepe says, I want to buy your number one book with the dedicated signature. Sure. My first book, though, is going to bore you, Pepe. You're a Dave Ramsey fan. This first one, the one that I'm trying to do it more as a business card so that I might be able to use this to venture out and do different things from a business perspective in trading and investing. So it's really... and I've never read one page of anything that Dave Ramsey has put out. So I watch a couple shows, and I know exactly his talk track because I've been in that industry for a very, very long time. I disagree on a lot of points with Dave Ramsey, but I'm kind of changing my approach a little bit. But it's basic finance, right? It's basic investments, not investments. It's personal finance. It's budgeting. It's making sure that you can set a plan in place to get yourself out of whatever bad financial situation you're in and get yourself to a positive situation. The second one, which I have to finish after that, is the investment one, the guide to getting rich is what we're calling that one. So anyway, let's see, Tom says, Ganesh, I do a lot of zero data expiration spreads, and it can be boring and safe if I behave with my stops. Yep. Yeah, I get the big factor there, Tom, would be what time frame is he using? Typically when you're doing zero data expirations, you don't have time, or time's not your enemy really, depending on what your strategy is. You've got 1 day. I mean, how far is that thing going to move? Well, a day like today where Walmart gaps down and continues to sell off 8%, it could potentially hurt you. But anyway, sending me on some options. Yeah, let me get to that. I'll do that one on tomorrow's show because I got to wrap up here. I got things I got to take care of tonight. One of a million. There's no way on this great green earth I will sell 1 million books, but I appreciate your optimism. I'll probably get a couple hundred sold. That'll be my pat on the back and then done. I don't know, Jimmy. I was supposed to finish this thing by my birthday, which was October 26th. Didn't happen. There's a little too much going on, so hopefully I can take some time out the next couple weeks and really focus on getting it done. I've got a lot of it done, but just I'm so picky. I'm such a I'm annoying myself when I write because I just keep going back and changing. Video on how to manage your retirement account, Dave Ramsey on Bitcoin. Yeah, exactly. And again, I think when any investment, you got to look at it with open eyes and objectively analyze it and see what the opportunity is there. I think Dave Ramsey's kind of foolish with his perspective on cryptocurrency, but that's him. Yes, Lisa, I'll do a show tomorrow. I'll definitely do a show tomorrow, and we'll see how things go from there. I'm not sure on what next week's schedule is gonna be like. I hate to leave you guys for 3 weeks, but I may have to do that just because I might be traveling next week, and then I'm gone in Hawaii the week after, and then I teach a class the week after that. So busy boy. Anyway, that's gonna do it for today. If you guys have comments, questions, feedback, things you want me to discuss on tomorrow's show, it may be the last show for a little while. So send your comments in. Who knows? We'll have fun on tomorrow's show. You can email me on there, and I will get to MJ's 2 questions, one on crypto and one on specific options trade on tomorrow's show. So thank you guys so much. Hope you enjoyed it today. Hit the like button, and I will see you guys tomorrow. Take care.